I'm Greg Hunter. Welcome to USAWatchdog.com. With us, somebody that I took a chance on a few years ago, but he's just eclipsed me. I mean, he's just blown up all over the internet. I did recognize he was a smart guy, and he's over at JS Mindset with the Holter Sinclair collaboration. Bill Holter, a great time to have you on. Thanks for joining us today on USAWatchdog.com.
Thanks for having me on, Greg, and also thank you for. I guess you were my first interview.
Yeah, but you were. I was reading all your stuff, which is now you give a little of that. When I don't get into the whole JS Mindset thing, but you have a paywall, and you give that to all the people that are your subscribers, which I think is the deal. And also, you and Jim, I think, talk once a week or a couple of times a month. Anyway, but you still give some of that away, and it's fantastic content because you're a bright guy. You know a lot about gold and silver and finances and the economy. You just do a great job. But anyway, I want to talk about gold. A lot of people are watching the gold market, and it was up, I don't know, 10-11% last year, and they're watching this thing just thumb depressed. I mean, everybody, that's not even, right. Don't even want to have to explain that it's happening, that it's being suppressed, gold and silver. Does it look like with the 21 missing trillion and the 20 trillion in deficit and all the shaky banks around the world, is it going to break out at some point?
Well, yeah, real physical gold will. I think it's very possible. I've said this in the past. When the game comes to fruition, you could see paper gold, you could see COMEX prices plummet, whereas real physical gold will be skyrocketing in price or not even attainable. It's interesting, since last October, it's been discovered how COMEX is bailing on their obligations to deliver. Actually, this month, I think, in their registered category, they've got 15 tons available to deliver, and there's 21 tons already standing for delivery. So there's more gold standing for delivery than they have. But the big thing are these EFP, exchange for physicals. So far this year, and we're not even a full 6 months through the year, there have been 1.6 billion ounces of silver sent over to London via EFPs. Global production is only 750, 800 million ounces. So just in 6 months alone, there's been 200% of global annual production sent over to London for delivery. In gold, it's similar. Gold, there's been almost 4,000 tons to this point, and the world, ex China and Russia, only produces 2,400 tons a year. So the delivery demands going over to London are completely blowing away what global production is. It's clearly fraudulent.
How do they get if they actually have people physically? And I'm sorry, I don't know as much about this as you do, but if they actually have people standing for delivery, at some point, don't they roll out a flatbed with nothing on it and go, yeah, we're out?
That's the point. That's the point.
Aren't they being overrun now? Isn't there more calls for delivery than they actually have physical calls to deliver right now? Why isn't this blown up is my question.
Well, on COMEX, as I mentioned, they've got, I think, 15 tons available to deliver, and 21 tons are standing. Can they get the other 6 tons? Yeah, obviously they can push it off another month or 2 months or whatever. But these exchange for physical obligations that are going to London are in 6 months' time roughly double what global production is. There's no way 1.6 billion ounces of silver exists to be delivered anywhere on the planet.
So well, this is where it blows up, right? This is what you've been talking about. How it will. When do you think this manifests itself? When nobody will take the cash, and everybody wants their physical, whether it's gold or silver. Does that blow up this year?
Well, you tell me, if the banks, does the banking system come down this year? Yeah, absolutely. I mean, obviously, a leading candidate to blow up the system is Deutsche Bank.
Yeah,
If
I'm
you look,
glad you brought that up. Go ahead.
yeah, if you look at, they were just fined again for manipulation for $205 million. I mean, that's, I don't know how many fines they've paid, but that's another in a long line. It was discovered that they had a huge loss in the first quarter, 12 times the VAR, the value at risk. It, if you do the math on it, it looks like just in one trade they lost $400 million.
Oh,
I'm sorry, 400 billion, not million, $400 billion. Uh,
so
there,
I gotta stop. They lost $400 billion. Of course, this is a bank with something like 50 trillion in derivatives notional value.
I'm
I mean,
sorry, yeah, I'm sorry, it's not billion, it's 400 million, but that pretty
still,
much,
$400 million is a
ate
chunk
up,
of change.
yeah, it pretty much ate up their income for the quarter. But the point being, here's a bank with total assets of $1.7 trillion dollars, or yeah, roughly $1.7 trillion dollars, and derivatives well over 50 trillion. And they are on the list, the Federal Reserve's list of troubled banks.
Well, they also the IMF it just came out a few years ago and said they were the most systemically dangerous bank in the world, and then a year later they added another 8 banks. So, is that your prime? That's my prime candidate for the dead canary on the floor. I mean, I know the banking system's a
Right.
mess. People like Rob Kirby say it's a complete mess, and the reason why they had that trade, I failed to put this in my weekly news wrap up. I wanted to, I didn't. But Rob Kirby, I called him about it. I said, "This is outrageous. I mean, it's off the charts. I mean, you look at the I mean, it's unbelievable." He said, "Well, I think that big loss was BaFin, the regulators, forcing them out of trades. They just said, 'You're out, get out. We're going to lose money. We don't care, get out.'" That he thinks it was a forced liquidation that caused that kind of a huge loss.
Well, very well could be. But just look at the size of Deutsche Bank versus Lehman Brothers. They're
Oh,
250% the size of Lehman Brothers.
yes, yes, yes. It's
And Lehman Brothers, on a percentage basis to their assets, had nowhere near the amount of derivatives that Deutsche Bank has.
I mean, aren't they going? Don't they have to have an income to service that book? I mean, when you have a loss like that, doesn't that hurt your ability to service that big book of business? I just seems to
Right, it
me as a
hurts everything. Well, and another thing that it hurts is reputation. I thought it was interesting. There was an article that came out yesterday or the day before where I think the guy was training to be a trader at at some institution in Europe and ended up building a live position. It wasn't actually a trainer. It wasn't a training account. It was a live account, and built up a $5 billion position where at one point he had $1 million loss and ended up closing out at with a $10 million gain. How does that happen? How does somebody uh, live with no collateral behind it trade and build a position of $5 billion? I mean, it's something like that that will light the fuse and just blow everything up.
Do you think he did it with derivatives? Is what you think? For phony money?
No, from the story, it looks like he was trading forex. He was trading foreign, uh,
Currencies.
right. It was a currency trade, and it doesn't say what currency it was, but it does say that he built a position to $5 billion worth, and when he closed it out, he had $10 million in profit, and is now asking for the $10 million, and the bank is saying, no, that's not your 10 million. So there's going to be lawsuits. But the point being, how does that happen? How is it even possible for somebody to build a $5 billion position in something with zero capital involved?
I, well, that's the problem with the banking
Well, in
system.
Deutsche Bank, I don't even know how this is possible. Deutsche Bank made a $28 billion payment mistakenly and had it reversed. I would think that if they made a $28 billion payment, that would have shaken the inside of the bank to its core in order to come up with $28 billion.
Well, obviously, I've had other people talking about it because I was on this for a while, and when the stock was a couple of years ago, when the stock got down to 11 or 11 and change or something like that, and then they drove it back up to around 20, and now it's back down as of last night anyway. Probably today, I don't know what it is right this minute, but it was around it was under $11 at 10.89.
Right.
And so, I mean, they're obviously the stock's being supported. That's what Hemke says, and other people say the same thing. Obviously, they're being supported because they've had all these losses and they're on a watch list. At least the U.S. operations on a watch list from the FDIC, from the Fed. But how how many gut punches, where you cough up blood, can Deutsche Bank take? I mean, how long does this go on for? I mean, they are obviously in trouble, and nobody in the financial financial news arena, will say a word about it.
Right. Well, just look at I saw an overlay of Deutsche Bank's stock chart versus Lehman Brothers, and it's almost an exact mirror. And according to that, it would be this fall.
Oh boy, I mean, but you are in the camp, and that's what people are. I mean, this whole thing, gold is interconnected with everything. It seems like everybody wants their physical gold now. I mean, Russia has more gold than treasuries. China,
Right.
as you know, been importing gold. We have other people repatriating their gold.
Right.
So what's up with everybody's repatriating their gold trade?
Because they understand if the gold's not in their possession, if they left gold in the United States and the system comes down, good luck trying to get your gold. They understand that gold and silver are the only monies that don't have a liability attached to them. I mean, every currency in the world, the yuan, the dollar, the euro, you name it, every single currency is debt backed. And gold and silver are the opposite of debt. They're assets, free and clear. The capital has already been expended to extract them, coin them. They have value because they are.
Not what they are perceived to be.
Right, exactly.
But everybody always when they have gold experts on, and I know you're an expert in both gold and silver. You're a precious metals guy. I mean, you work for Miles Franklin also.
Yeah, I still do. I clear all my business through them.
Okay, so I know you do millions of dollars of business. I hope that's okay to say that.
Hey, Greg.
Yeah.
Before we
I wanted to ask you about silver. About the silver ratio. About, is it a deal? Should people be buying it? A lot of people. I had somebody ask me if they should buy gold on a credit card. I don't think you have any business buying gold or silver if you're using a credit card. I mean, there's absolutely no exceptions. Don't do that unless you get that bill and you can pay it off in full. Don't do that. That's the ultimate margin call at 18%. I mean, or whatever
it
it
is
is.
better than buying Bitcoin on a credit card, though.
Yeah, well, at least you end up with the asset, but you got to pay for it. I mean, that's a heavy. Yeah. But
No,
what about gold and what about silver? What about silver and what you should be doing? Should you be buying junk? Should you buy U.S. Gold Eagles? Should you buy Canadian gold? What should you buy in silver? And should you buy silver?
Well, yeah, you absolutely should purchase silver. That's what I was gonna bring up is an analyst, and I'm not gonna name who it is, did an interview yesterday or the day before. My email blew up with people saying, "Oh my gosh, they say that silver is not going to do anything." They said that if you go back to the days of Weimar Germany, gold exploded and silver languished. And I have no idea where that information came from, because worldwide, the peg between silver and gold at the time was 14.92 times. Call it 15 to 1 silver to gold ratio. And if the value of gold shot up in Weimar Germany and silver didn't travel with gold, even though that was basically everything was slow, but there would have been arbitrage. You would have seen gold flooding into Germany because it was overpriced versus the rest of the world, and silver would have been extracted from Germany because it was underpriced. So I just think that analysis is absolutely incorrect. I don't know if there's motives uh, behind pushing gold rather than silver. But to me, with an 80-to-1 gold to silver ratio, and silver comes out of the ground roughly 10-to-1. It's a little bit under 10-to-1. That's God's ratio. God's ratio is 10-to-1, and that's where the price at some point will arrive at, given totally free markets.
In other words, gold is 80 times. It takes 80 ounces of silver to make 1 ounce of gold.
Right,
So
exactly.
it's 80 times higher, and should only be 10 times higher. So either gold is way, way, way too expensive, and it's only a couple $100 of mining cost, or silver is way, way too cheap. It's right around mining
Right.
cost.
That's what it works out to be. Is silver's way too cheap. Silver is the cheapest asset on the planet.
So explain.
Well, just look at the value, the price of silver right now versus anything historically. Look at it versus gasoline. Look at it versus wheat. Look at it versus housing. Look at it versus the Dow. Uh, we live in a world where financial assets have been engineered higher with the use of credit. And if you look at gold and silver, they actually have reverse leverage on them, because if you look at the COMEX contracts and other other derivatives financial contracts, the leverage is to the downside. So when the credit markets blow up, and there are signs of that starting to happen, you can see it in liquidity, you can see inverted yield curves, and we can talk about inverted yield curves in a moment. But gold and silver, the leverage in those markets is to the downside, not to the upside. So when the credit markets break, you're going to see the support for stocks and bonds be lost, and you'll see the suppression on gold and silver end.
In other words, it'll be released. I mean, it isn't. I
Yep,
mean, I
yep,
had Catherine Austin Fitz on, and she said rich people were she said this over the last 10 years, rich people doubled their land holdings. They're buying gold and silver. They're using Bitcoin to keep people out of gold and silver so they could buy it all. She said that after the interview. She's smart. She travels all over the world. They're buying the whole businesses. They're not buying stocks. They're buying the entire business.
right. Yeah, no, that would make sense to
That would
buy.
be just like they're buying stuff. Rich people are just buying stuff and
Right.
holding the title to it, right?
If you're buying businesses that produce something, you can buy a business at 3, 4, 5 times earnings, as opposed to the average stock today at what, 20, 25 times earnings, which is historically off the charts. So you can buy an individual business for way cheaper than you could buy a similar business on the stock exchange.
Their reset, the reset talk, and a lot of people, even Catherine Austin Fitz, who hasn't talked a lot about the reset, but a lot of people are talking about the reset. Or do you think somebody told me that he thinks the reset is happening right now? It's actually
Yeah,
in the
I
process
agree.
of resetting. Could you
I
talk about the reset? What you're saying?
Yeah, I agree. I think that the reset is already in motion, because you can see credit. Credit is what created values and pricings that are incorrect. And now, I mean, just look at the Fed. They're talking about QT, quantitative tightening. They're talking about pulling what, 600 billion by the end of I think it's by the end of this year. They can't. There's no way. If you go back to Richard Russell, inflate or die. That is what the system is. You can't. You cannot take capital out of a Ponzi scheme and expect it to stand up. And that's what this is. It's a Ponzi scheme, and the Federal Reserve is bluffing, saying that they're going to pull quantitative easing out. They're going to reverse it and take that out of the system. There's no way that can be done.
Well, they you know what though, Bill? They must know this. So what are they doing? They must know this. They have to know this. They got PhD level people. Of course, they're not going to say this in public. Are they just playing for time? I mean, that's all. That the only thing I can see is they're just playing for time.
Well, they're timing it, and I have said this in the past. I do believe there will be some type of event that fingers can be pointed at and say, look, if it wasn't for this, maybe it's a war. Who knows what the false flag event will be or real event will be. Uh, they're going to point at something and say, well, our policies were working, everything would have been fine except for XYZ, whatever it is that they point their finger at. And I know you have John Williams on often. John does fabulous work. He counts the beans the way they used to be counted in the 70s and 80s.
Yep.
And the staggering figure, obviously the true inflation rate, the unemployment rate, those are all staggering. But the staggering figure is production today is still 6% lower than when we went into the recession in 2007, 2008. So production in the U.S. is still 6% below those levels. That means we've gone 10 years with zero expansion, and all it is recovery, but we've not retaken, where we were 10 years ago.
Isn't this what's the reason why the whole budget, the
But
border battle? Go ahead.
But debt has doubled. You see what I'm saying? The production is not even where it was 10 years ago, but debt has doubled. And we can talk about trade wars. Trade wars on their own are dangerous. But when you have an over-levered global system, it's very dangerous, because when trade begins to slow down or cease, that's the equivalent of a homeowner, they get hours cut back or lose their job. How do they pay the mortgage? How does the debt globally get serviced in the middle of a global trade war? It doesn't, and the system comes down.
Actually, maybe Trump knows that, because they just had a story out. Canada and the EU are buckling. They're saying, yeah, we'll do your we'll acquiesce. We'll drop our tariffs. I mean, that's what he said at the G7, which I didn't bring up all that much, but I think that was the most powerful thing he said was, hey, let's all drop our tariffs here at the G7. Which, but I think they're freaking out. They're freaking out. They know they can't have a trade war. Every one of them's freaking out.
There's a problem with dropping all the tariffs. The tariffs are paid. Where does that money go? It goes to, quote, the state.
Oh, they're servicing debt.
Pardon?
And they're servicing debt.
Right, exactly. And the debt outstanding today, like I just said, is basically double what it was 10 years ago or 12 years ago.
It's countries that are going to go down. Is that what you're? I mean, that's what you're. Deutsche
Exactly.
Bank is so big that it could bring Germany down, along with Commerce Bank. Also has a ton of junk derivatives, stuff that they can't pay. I mean, Germany they were like, Trump's talking about lowering this tariff, and they went, okay, yeah, we'll do it. I mean, right? I mean, they're like freaking out. I mean, they're like.
It will be interesting to see whether 6 months or a year from now, whether there still is a European Union. I mean, it's clear that Germany is turning east, if you will. And I mean, look, what about Italy? It's going to be very interesting to see if the EU is still around, or if they break up into the original countries that they were.
They're going total anti-immigration, and they are. Wait until they find out that they have a whole lot less gold than they thought they had. They're like the number 3 or 4 or 5. They're way up there, a gold holder and physical gold. Wait till they find out Mario Draghi ain't going to be able to ever go back to Italy. He's going to end up like Benito Mussolini and hung upside down.
Yeah, they supposedly have 27 or 2,800 tons.
Now, do you think they have that?
I don't. I think a lot of the gold has been compromised over the years via leasing, etc.
What about the U.S. gold? I mean, there's talk that the U.S. would like to have a gold standard, but yet the price is $1,300 an ounce. I mean, years ago, people thought Jim Sinclair and you guys were crazy when we talked about $50,000 and $60,000 an ounce. But you add up the 21 trillion, then add in that 21 trillion that's missing, and you add the 40 trillion, and you can get a pretty big number for what the price of gold could be to back a U.S. dollar, not a Federal Reserve note. I mean, could you
Right.
talk about that for us?
Yeah, there's
Because people don't understand. They think 50,000 an ounce. Wow, it could be 100,000 an ounce. I mean, the money out there is we've been told it's times X, but it's way higher. Could you talk about what the price of gold could end up being without? I don't want to draw a lot of fire on you, but there's a lot of cash, a lot of debt, a lot of bonds. There's a lot out there.
Okay, let me first start by saying I think that any prediction for the price of gold in dollars that you or anyone who's listening to this or watching this has heard will end up, when all is said and done, it will end up too low, no matter how crazy the number is, or it appears to be now.
And this is gold and silver.
Pardon?
Gold and silver.
Yeah, either gold or silver. I think whatever crazy number you've heard, that number is going to end up being too low.
Explain.
Well, because there's so much debt outstanding, the amount of gold the amount of gold held supposedly, and let's say that the gold is in Fort Knox, the amount of gold, it's argued, oh well, we could never have a gold standard because there's just not enough gold. No, gold, there's plenty of gold, but it's not priced correctly. So it's got to be at a higher. It has to be at a higher number. And if you're talking about 21 trillion of debt, 21 trillion missing, 150 to 200 trillion of future obligations, now you're talking about adding several zeros to the price of gold and silver if they were to back the currency.
But let's say they only back it by 15 or 20%.
Yeah, even if it's a ratio backing of 40%, you're adding several zeros. And going back to the Weimar experience, what was the peak in gold there? 2.3 trillion Reichmark per ounce, or 2.7, I forget what the number was, but it was over 2 trillion Reichmark per ounce. And no, we're not we're not Germany. We are the world reserve currency, but we have built up way more debt than was global at the time during the 1920s, during that experience.
Trump has to know this. I mean, he went to business school. He must know this. He's not stupid. Either the people that work with him, they got to be freaking out that they want to try to, they're going to have another currency. They're going to have something. I mean, if Deutsche Bank could go down on just like Lehman Brothers, $10 a share on Friday, and on Monday it was worth a penny. I mean, they have to know this. They have to be as nervous as a cat in a room full of rocking chairs. Am I wrong?
I would first say, you mentioned it had a value on a Friday and was a penny on Monday. What was the real value on Friday?
2 pennies, maybe. I don't know.
No, I believe Donald Trump absolutely understands the situation. He did hire Judy Shelton, and Judy Shelton, if you go back to the call it 2004, 2005, she was talking about a reset and $10,000 gold back then. So the numbers have changed. You'd probably be looking at, I don't know, $25,000, $30,000, $40,000 gold now under her scenario. And part of her scenario, I believe, included the SDR. And I think that may be what's tried first, is a new reserve currency made up of the SDR, made up of global currencies, and it's going to fail because it's still fiat. You've got to bring gold back into the system. There has to be something behind a currency to bring back confidence.
Which I think, go ahead.
I was going to say confidence is going to break, and the only way to bring back confidence is you have to make things real again, because we live in such a a world of everything is false. When confidence breaks, it'll be like the slogan in the state of Missouri: "Show me."
If you just, I mean, I know you don't know this, but if you were on a fly on the wall, and you know what's going on overtly with Deutsche Bank, even though it's not reported very much, and you know that the banking system's shaking, and you know that there's this possible trade war with Trump's using leverage, and if you know all this is going on, what do you think they're talking about in the background? They have to have a developed plan at this point. They can't just, we'll just find out how it goes, and we'll fake it when we do it. We'll just do it. What do you think the plan is? What would you, if you were guessing, just speculating? What do you think the plan is? They know there's a problem. He walked into office with $20 trillion in debt. What do you think the plan is?
I think the discussion is about the timing and how the system's going to come down, and then there's also discussions of what's going to be the next reserve currency. I think that's been going on behind the scenes for 2 or 3 years or longer.
And when this thing goes down, I mean, I always ask people, this what does it look like to the man on the street? And I don't really often get a great answer, but I know you're a kind of a common guy, smart guy, but you ride horses, you get your hands dirty, you get you cut up from bob wire. I have, my mom has a farm in Missouri. I can't come back with all cut up. What's happened to you? Well, anyway. So what happens to the guy on the street?
It depends on where that street is. If the street is, if it's a dirt road, you probably got a farmer nearby, and if you produce something, you can trade for something they produce. If you're in a city, may God help you, because distribution is going to break down. And I've said this for the last 3 years now, when credit does break down, distribution will break down. That means empty shelves at Walmart, empty shelves at your grocery store. The ability to get goods that you need to survive, if you live in a city, will probably be from FEMA trucks or Army trucks. They'll be hauling in water and rice and stuff like that. Cities, you're not going to be able to survive. If you live out from cities in rural areas, I think your life is going to change, because some of the common things, like bars of soap and stuff like that, are going to be difficult to find. But there is more sustenance if you're living closer to living off the land than living in a city where you don't use cash, you use only a credit card, you have 3 days worth of food in your pantry. Good luck with that.
Wow, man, that's pretty dark.
Well, that's common sense, Greg. I mean, the problem is too much debt, right?
Yeah.
Globally, that's what the problem is. And we know in the past, when debt bubbles get blown up, when they grow and get bigger and bigger, they pop. And this is the biggest debt bubble by multiples of any time prior in history. And when the debt bubble blows up, everything runs on credit. So that means everything's not going to run, or it's going to be somewhat dysfunctional. And the most important thing that runs on credit is distribution. I mean, there's not a bunch of little elves in the back of Walmart that bake loaves of bread and put them out on the shelves. They get shipped in. I mean, every single product, go through the day, and everything that you look at, think about how it got there. Did it get there? Did it grow there? If you're looking at a wheat field or an orange farm or something like that, yeah, it grew there. Stuff is still going to grow, but it won't make it to market, because in order to get to market, there has to be the use of credit all along the way, from the trucker to all the way to the end, to the shelf.
I want to just come back to one thing, because I know you're an expert in gold and silver. You actually physically obtain it for people.
Mhm.
at Miles Franklin. Do you think that this non-delivery thing happens this year? A Bo Pony, who's not been very good timing, he's admitted that. He's timed Bitcoin and other stuff, but he thinks that this is the year. He's a smart guy. He's got, you know, he's a smart guy, but he's still sticking by his guns and thinks this is the year it blows. It blows sky high. This thing is going to get unleashed, uncorked. This is going to go crazy this year. He's just doing it on charts and timing. Do you think, when you're talking about the actual a wave more, multiple tons higher that are standing for delivery than they actually have, does this thing get completely blown up this year in terms of the delivery and and non-delivery and whatever? Do you think it happens this year? Is that what you're
Well,
saying?
I think it does, and let me say that the math has not worked for. I mean, it's been a Ponzi scheme for many years. It's a fraction. It is truly a fractional reserve scheme in at Comex. If we look at the yield curve, the global yield curve, it's it's as flat as it's been since 2007 and on the verge of inverting. And what that's telling you is that you've got short rates going higher and long rates have gone higher, but much at a much slower basis. The important thing about the yield curve is we have had recessions in the past without an inverted yield curve. That's happened. But we've never ever had an inverted yield curve not followed by a recession. Every time the yield curve inverts, we go into a recession. And if you go back to 1991 in the US, every single recession has been aborted early by the Fed stepping on the gas. And they had to step on the gas so hard after 2008 that they got rates down to zero, and about 1/3 of debt all around the world went to negative yields, which is an impossibility if everyone in the world is sane, but obviously that's not the case. So my point being, we're right on the cusp of the yield curve going fully inverted. When that happens, history shows we have a 100% probability of a recession. In today's world, with the amount of debt outstanding, you can't have a recession. And I say you can't have a recession because the debt just simply cannot be carried. You'll have things imploding upon each other. And, like you said, take Deutsche Bank as an example. That alone would take the whole system down.
Wow. You, woof. People need to be buying pork and beans and water. I mean, that's what you're
Well,
saying.
it's
First and
good.
foremost.
Yeah, it's good to have a source of water close and a way to purify that water.
Yeah. All right. Well, listen. But this, you think 2018 is the year gold finally gets some respect and silver?
Oh, I don't. It's not a question of whether gold or silver get respect. This is about the whole system. This is not just about gold and silver. And gold and silver on their own, they're not going to save you. They will financially, but you can't eat gold and silver. You need to make preparations, food, water, way to protect what you have. I mean, like I said earlier, if you live in a city, you've got no way to protect yourself. So I think this year is when the truth of what our real living standards, that we've lived above our means for so long, we pay the piper back. And whether it's a month or 2 months or 6 months, I don't know how long, but the system's going to go down. The system will go dark, and you're going to have to. I've told people this several times. Spend a weekend like a caveman. Don't use your electricity. If you turn your faucet on and water comes out, boil it. But don't use your stove to boil it unless you've got that hooked up to your own source of propane or whatever. The point being, go a weekend and find out where the holes are in your plan. because that's where we're gonna go to, is a system down.
Bill Holter, jsmindset.com is the website. His business partner is Jim Sinclair. He's a fabulous guy. I love him. He's a very brilliant brain. I know why he picked you to be his business partner, because he's smart and he gravitates to smart people. But anyway, Bill Holter, you tell us about you have a subscription service with jsmindset.com. I think it's up to $129 a year.
Right, for the year.
Explain that. What do you get for that? Your writings, obviously, which
I
are
write
brilliant.
a couple articles a week, and Jim and I and a friend of ours, Dave, we do a weekly. It's generally 45 minutes to an hour. We do a weekly recorded call, and that's for subscribers. And then on the free side, we all three of us pick articles of interest that we think are pertinent to what's going on, and we'll write 2 or 3 lines about it. But generally speaking, if we think something is of interest, there's a reason for it, and we'll put a 1-liner or 2-liner as to why.
Well, I still to this day, I've always checked JS Mindset for that reason, because if one of you guys are thinking something's important, and I always see something I don't see on Drudge, I don't see on Breitbart, I don't see on any other thing. I see something. Oh, I didn't catch this. I didn't see that. So you guys are always putting stuff like that up, which I think is very cool. Anyway, listen, I'll put the links up for your subscription page. Of course, it's jsmindset.com. Links up for that too. Bill Holter, thanks for joining us today on USAWatchdog.com.
Thanks for having me again, Greg.